Once upon a time, there was a world where money wasn't so hard to understand, and building wealth was accessible for the average person, and going to school wasn't a financial death sentence, and saving money didn't make you poorer. Now, things have changed. What's up, everybody? I am Jaspreet Singh from the MinorityMindset.com, where money minds rethink rich. Money has changed, and our financial system has changed, and our economy has changed, but the way that we learn about money has not changed. So we have an entire generation of people that are learning the old rules of money while the way money works has completely changed. This is why you're seeing a bigger divide between the rich and the poor. This is why you're seeing a middle class is being wiped out. And this is why so many people are struggling to become wealthy, because they're playing the game with all the wrong rules. I'm a money nerd. I love learning about money and understanding money and what it is and the history of money. And I also like history. I love learning about history, different types of history. And today, I want to put the two together. I want to talk about money and the history of money and how money has changed, especially in recent times. That way you can understand what's going on with money and how this evolution has made it more difficult for people who don't understand money to actually become wealthy. There are 5 big ways that money has changed that I'm going to be discussing in this video. But before I go into what money was like once upon a time, I need you to do me a quick favor and smash the thumbs up button below. And if you are looking for some extra minority mindset, I want to let you know that we have launched a few new YouTube channels. We have launched the Minority Mindset News channel, where we post daily updates on what's going on in the financial and business world. We have the Minority Mindset Clips channel, where you can watch shorter Minority Mindset videos, something around 10 minutes long. And we also have the Minority Mindset Spanish channel, where you can watch all of our Minority Mindset content in Spanish. So if you want to check out some of our new YouTube channels and subscribe and watch these videos, I'll put the link to where you can do that in the description below. Let me start with number 1. Once upon a time, there was a world where saving your money did not make you poorer. Back in the day, the dollar was on the gold standard, which meant that every single dollar produced was based on how much gold that you had. So if you had $100, that meant that you owned $100 worth of gold, and this piece of paper was just a representation of how much gold that you owned. Gold was considered to be real money because in order to get an ounce of gold, it took physical time and physical labor, and so it took effort to produce an ounce of gold, versus this paper, the paper money that we had, could be created with essentially no effort. And so this physical paper was just a representation of the gold, which took actual time, labor, and effort to produce. Now you got to remember, money is just a representation of value. Right? If you have $100, it's $100 worth of value. The way that you get $100 is you produce $100 worth of value, and then somebody pays you $100. Now, when you're looking at gold, when you have a physical piece of gold, you have a piece of value because somebody had to put in time, somebody had to put in effort, somebody had to put in their own labor to produce this ounce of gold. So when you go out and create value, you're getting value in exchange, which is this gold. But it's hard to carry around physical pieces of gold. So that's when the government came out and they created certificates or pieces of paper which represented physical gold. So back in the day in the United States, the US dollar was either based off of gold or silver. Then in 1971, the United States started running into some financial problems where they were exporting a lot of gold. They had to pay off a lot of countries, and so a lot of gold was leaving the United States, and that's when President Richard Nixon stopped the conversion of dollars to gold. In other words, he took the dollar off of the gold standard, and after that day in August of 1971, the dollar was no longer backed by gold. It was just backed by a promise that the United States government will continue to support and create value behind the dollar. Now remember, there's no real physical thing that is backing the value of the dollar. It's just the promise that the United States government has given. So the dollar isn't backed by gold or silver or anything tangible. It's just a promise. I mean, it costs something like 12 cents to produce a $100 bill, but a $100 bill is worth way more than 12 cents. Removing the dollar off of the gold standard allows the government to work with the Federal Reserve Bank to now essentially print an unlimited amount of money, our paper dollars, without worrying about producing more gold, because now you can produce more money at the click of a button. You can't do that when your money is based off of the gold standard, because if you want to produce more money, you have to physically go out and mine more gold and produce more value, and then you can create more money. But when you're just printing money and it's not based off of anything, now you can print as much money as you want. Now the good news out of this is it can allow the economy to grow a whole lot quicker, especially in the short term, because now you can inject a whole bunch of money into the system, and as long as people keep working for the paper money, this can allow the economy to grow a whole lot faster, because now there's a whole lot more dollars in circulation. This is exactly what you saw happen after the 2008 crash and after the 2020 crash, because the United States government worked with the Federal Reserve Bank and they printed tons of dollars, trillions of dollars dollars, and they injected this money into the economy, into the markets. That way they could get the economy moving again. So this money gets printed essentially out of thin air, it goes into the economic system, and now banks have more money to lend out, companies have more money to invest into their growth, they have more money to hire people, and so this can allow the economy to grow a whole lot quicker, but it comes with a price. Because anytime you print more money, it also creates more inflation. Inflation is when the value of your dollar goes down, which causes the price of everything else to go up. Anytime you see more money be printed, you see the same pattern result. First, you see people feeling very rich initially because they have this new influx of cash. And then they spend that cash, and then after a short amount of time, people realize that now they're poorer than they were before because the dollars that they do have don't stretch as far, because now you need more dollars to go out and afford your cost of living. You need more dollars to afford your rent. You need more dollars to afford your home. You need more dollars to afford your groceries. You need more dollars to afford your vacations. And so you just need more money now to afford your life because each dollar has less buying power because now there's more dollars in circulation. Inflation is good for the financially educated, but it's not so good for the majority of people who are not financially educated, because now when inflation happens, you have to pay more money to afford everything, and the amount of money that you're making cannot support your new higher cost of living. But now when you're financially educated and inflation happens, now you're the one benefiting because you own the means of production. When the prices of things go up, the price of your products go up. When the price of assets go up, your investment prices go up. So the people who are financially educated benefit when the government and the Federal Reserve Bank go out and print more money because they own the assets. But the majority of people hurt when more inflation happens because now more money gets printed, and sure, maybe you get a little bit of an influx of cash in the beginning, but then you realize that the dollars that you do have don't stretch as far. This is why saving your money makes you poorer, because your dollars that are in your savings account are not growing. Your savings are just flat. But at the same time, the price of everything else keeps going up. And so now, when you follow that old financial advice of just saving 10% of your paycheck, that way you can become wealthy, your savings are actually making you poorer each and every day because your savings are not growing. Your cash is a liability. It is losing value every single day as more and more money gets printed because the value of each dollar goes down while the price of everything else around you keeps going up. It wasn't always like that. There was a time where saving money was a true path to building wealth because the money that you were saving was real money. It held its value because it was backed by something tangible, something physical. Sure, sometimes you would see more inflation or deflationary periods, but saving your money was a lot more powerful back when you had higher interest rates in your savings account, and it was a lot more powerful when you weren't seeing such high amounts of money printing and inflation. This is where it helps to understand people's motives, because it will help you understand why things are happening and what you should be doing with your money. Because a lot of times people assume that the government or somebody else is going to take care of them. But you have to understand, the government wants more inflation. It's in their best interest to see more inflation, because inflation is when the value of dollars go down. And right now, the United States government is drowning in debt. I'm sure you've heard talks about the national debt crisis and how the United States government is drowning in debt and they have all these national debt issues. But inflation is when the value of the dollar goes down. And so if the government has this amount of debt and the value of dollars go down, that means they can pay off this amount of debt with cheaper dollars in the future. Let me demonstrate what I mean. Let's assume that you go out and you buy a $500,000 home and you get this mortgage at 4% a year. Now, you start paying this off and you get a fixed 30-year mortgage. Well, into your mortgage, let's say more inflation happens and the property that you bought now goes up in value from $500,000 to $1 million. Now you're paying off your $1 million home with just a $500,000 mortgage with your fixed rate 4% mortgage. In this instance, your monthly payments are around $2,400. And while you're paying this, if more and more inflation happens, guess what? Well, this $2,400 isn't gonna mean as much. Maybe you're making more money now, maybe your assets are worth more now because you're seeing more inflation, and so this money that you're paying off for the next 30 years, $2,400 a month, is worth $2,400 a month today, but in 5 years or 10 years, this $2,400 a month that you have to pay for now your $1 million home doesn't cost you as much, it doesn't feel as painful, because there's more inflation. This $2,400 isn't worth as much in the future as it is today. And so now it's more beneficial for you to have inflation because now in 10 years, this monthly payment that you're making doesn't cost as much or doesn't feel like it costs as much because the value of each dollar that you're paying is going down and you have this fixed rate mortgage. This is why the government wants to see more inflation, and this is why you're going to continue to see more inflation happen and you're going to see the value of your savings get eroded, is because the government has so much debt, and the only way for them to really afford their monthly payments on their debt is for this inflation to happen. That way the cost of the monthly payments, the real cost, not just the dollar amount, but the real cost of their payments to go down, is if the value of dollars go down. That way they can make their payments without feeling the same pain because the value of each dollar is less. The second change we've seen is with retirement, because once upon a time in money, there was a time when retirement was accessible for the average person. Now, I think the traditional concept of retirement is dumb, where you work a job that you hate from the age of 21 until 65, and then as soon as you turn 65, you quit, and now you can finally start living the life you want because hopefully you have enough money. That system makes no sense, and thankfully, the system is starting to change because people are realizing that, hey, I don't want to live a lifestyle like that. But beyond just the whole lifestyle of retirement, the whole concept of retirement is finally being able to live the life you want financially free because you have achieved wealth. Now, there was a time where this type of financial freedom was guaranteed, and this wasn't that long ago, because if you worked a job for long enough, then your company would pay you a pension. And to supplement that pension, the United States government would come in and they would give you Social Security checks to make sure that you are okay when it comes time for you to live your life. That way you can live financially free. The way it worked is companies would put together these tables and they would say, okay, you're going to retire when you're 65 and you're probably going to live until 72 years old. And then they would put together some analysis and some investments, and they would put aside their money assuming that you would live until 72 to 74 years old, and then they would be able to pay you in retirement until you hit 74. The issue that happened was people started to live past 74 years old, which is good for people, but it's not good for companies because now they're having to shell out more money. Companies couldn't afford to just keep paying people when they're in retirement, and so companies started to shut down their pensions. And now you're seeing pension crises all around the country where you have these pension funds that are running out of money because they just don't have the means to continue paying people. That's when the government said, don't worry, we'll solve the problem with the Social Security system. The Social Security system says that, hey, every time you get paid now, we'll have you, the employee, pay a little bit of money, and we'll have the employer pay a little bit of money. Now, it's really not a little bit of money, it's quite a bit of money, but every single time you get paid, now you're paying some money to the Social Security fund, which is supposed to be there to help fund your retirement. The interesting thing about the Social Security tax is it's costing you just over 12% of your paycheck when you get paid. 6.2% is paid by you as the employee, and the other 6.2% is paid by your employer. So it adds up to a 12.4% tax that's coming out of your paycheck every time you get paid on every dollar that you earn from your job, up to right around $140,000 a year. Now, I know some of you are probably hoping or wishing that there was a way for you to opt out of the Social Security payment. That way you could just fund your own retirement and just get a 12% raise in your salary, but you don't have that option because the whole idea behind Social Security is you're going to pay your money into this account. That way you can get a guaranteed retirement check when it comes time for you to hit retirement. But what's happening with Social Security now is kind of the same as what's happening with corporations and pensions, because the government is realizing that funding Social Security checks as people live longer and longer and longer is getting more and more expensive. And so what's happening is you are paying Social Security checks today not to fund your retirement, but to pay for somebody else to retire. This is why you keep hearing of issues like the Social Security fund drying up. This is where everybody says the Social Security fund can't dry up because the government can just print more money. And you're right. The government can create an infinite Social Security fund by printing more and more money. But you got to remember, this comes at a cost, because now when the government has to print more money to fund Social Security checks, the value of your Social Security check is going to keep going down because of the inflation that you're going to be seeing with the more money printing. But that's when the government got crafty. They put together a meeting with the government, Wall Street, and big corporations, and they came up with a system called the 401k to allow people to now invest their money for their own retirement. So now most people understand that they're not going to get a pension from their job, but they're paying their Social Security money every time they get paid, and every time they get paid, they're also putting a little bit of money into the 401k, hoping that now this will be enough for them to retire. The issue is we're about to face a retirement crisis like we've never seen happen before, because the Social Security fund not only is drying up, but you also have so many people hoping and praying that the 401k will be enough for them to retire and live off of, because they have no other assets and no other retirement funds to fall back on. Now look, your 401k has a time and a place. It's a good way for you to invest some tax-free money. It's a good way for you to get some free money from a corporation, but it was never intended to be your sole retirement plan. It was never intended to be your sole investment plan. But for so many people, their only investment and their only retirement hope is their 401k. Even the 401k founder, the founder of the 401k, has come out and said that the 401k has gone awry because so many people are looking at the 401k as their hope to retire, but that was never its intention. And if everybody thinks it's going to be bad for baby boomers, imagine what's going to happen when millennials or Gen Zers hit retirement age. There used to be a time where becoming financially free was very accessible. All you had to do was save a little bit of money and continue to work hard until your job until a certain age, and then you were pretty much guaranteed to be financially free. You'd have checks coming in and you could live your life and do whatever you want and not have to worry about money. Now, that is history. Literally, you have to create your own financial freedom through your financial education and through your own investing outside of your Social Security, although I don't really feel right calling your Social Security tax an investment, but let's just call it that for the purposes of this example, and your 401k. If you want to ever be able to retire or be financially free, you have to understand money, and you have to be able to invest your money yourself and create your own streams of income and create your own assets. That way you can benefit from your financial education. One of the most accessible ways to do that is by investing your money in the stock market, not just throwing your money blindly into the stock market, but smartly investing your money into the stock market for the long term. Now, I'm not going to go over that in this video, but if you do want to learn more about how you can invest your money in the stock market and build wealth in the stock market, our team has put together an amazing guide that will walk you through different stock market investing strategies, how to invest your money for the long term, and how to analyze companies. So if you want to learn more about investing your money in the stock market and building wealth in the stock market, I'll put a free guide on how to invest your money in the stock market in the description below. Third, there was a time where schooling was very different, because once upon a time, going to school wasn't a financial death sentence. There was a time back in the day where not everybody went to college, and the reason is because one, people didn't want to go to college, or people were able to get jobs without college, and some people just couldn't afford college, because back in the day, you weren't guaranteed to get a loan to go to college. A lot of banks would analyze you, and then they would decide internally if you were a risky investment or not. And if you were not a risky investment, then they would be willing to loan you money, even though a lot of colleges didn't really require that much money. But even if you did require money, if you wanted to get a loan, it wasn't so easy to get a loan to go to college. Back then, if you had a college degree, you looked really special in interviews because not everybody had a college degree. And so if you had a college degree, you stuck out, and you were much more likely to get a job, and you were much more likely to get a higher paycheck because you were college educated, while a lot of people were not. That's when the government came out and they wanted to make college education more accessible to everybody. That way people could get the opportunity to get more educated, to get a better job, and to make more money. So what they did was they made getting a student loan more accessible to everybody. They guaranteed student loans to everybody who wanted to go to college. So now, if you wanted to go to college, if a bank rejected you, you could just go to the government and say, hey, I got rejected, and the government will give you money. This is now known as the Federal Family Education Loan Program, and this program guarantees your student loans. So now what happened was anybody could go out and get a student loan and go to college. That's when colleges heard this and said, wait, you're telling me that no matter how much money I charge for my education, you, the government, will be willing to pay it? Okay. And that's when colleges started raising the price of the tuitions, because they knew that no matter how much money they charged, people would be willing to pay. Well, it's not just people willing to pay, it's that the government will guarantee it, and then people feel like they need to go to college to become successful because that's what we're always told. We're always told that if we want to become successful, we need to go to college because colleges are making so much money teaching the system. And so now you have the system where people feel like they need to go to college to become successful, and in order to go to college, you have to borrow a boatload of money from the government, and now you borrow a boatload of money from the government, you go to college, you pay a whole bunch of money, and you take a whole bunch of classes that you're sleeping through that you don't even attend. Now you graduate with a degree and you don't know what type of job to get, and now you are graduating with a boatload of student loans that you have to pay interest on that you cannot default on. Because the government created this interesting program that although they will guarantee your student loans, it is the only debt that you cannot declare bankruptcy or default on. Any other loan, you can go out and if you have problems, you can default on it, you can declare bankruptcy on it because the United States government created the system that you can restart on life if you face financial problems, except with student loans, because you're not allowed to default on your federal student loans. Look, I have my own opinions on college, which I'm not going to go too deep into in this video, but I went through a lot of college. I went through college, I went through grad school, I went through law school, and I spent a lot of money on these things. And although I am a licensed attorney, I don't work as a licensed attorney the way traditional attorneys work. And the people that make the most money are not the people that are college educated now. It is the people that are most creative. Sometimes they're college educated and sometimes they're not. I mean, you gotta just look at it practically. Back in the day, if you were applying for a job and you had a college degree, you stuck out because not everybody had college degrees. Nowadays, if you have a college degree, you're just like everybody else. You need to be different. And nowadays, a lot of people don't know how to think and be different because we're never taught how to think. We're always told that, hey, if you want to become successful, you just got to go dum, 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 dum. Follow these 5 things and you will be able to go and land your dream job. But it doesn't work like that now. If you really want to become successful, you need to know how to think outside of the box and you need to be creative, but we're never taught this. We're always told that if you want to become successful, just keep blindly following the system. And those are also the same people that are stuck in the system, they're stuck in the rat race, and they don't know how to get out. College education became a double-edged sword because education is great, but at what price? And the more people that have degrees, the less value that a degree has. We're starting to see a shift now. We really started to see this shift happen after the 2020 pandemic because people were going to work from home and people were going to school from home, and they were realizing, why am I paying $40,000 for a degree when I can just watch my classes online? And I can watch a lot of similar stuff on YouTube for free. And I can learn from people who are actually doing what they teach. And so you're starting to see a shift with people realizing that, hey, maybe I shouldn't be paying this much money for college. College is a lot of fun. I had a lot of fun in college. It was a great time. I learned a lot, and I learned a lot outside of the classroom because that's where I really started building my businesses. But people are realizing that, hey, this is a lot of money, and people don't want to sign up for financial death sentences when they're 17 because you have so many 21, 22, 23-year-olds with $100,000 worth of student loans, and now they got to figure out how they're going to pay this money back. It didn't used to be like that, and this is the situation that we're in right now, which is why it's so important for you to now start to think differently. That way you can break away and break out of the system. Fourth has to do with markets, specifically the stock market, because once upon a time, there was a time where the stock market wasn't so apparently manipulated. I mean, you've always had some sort of corruption and some sort of manipulation, but the level of manipulation that we're seeing now is so apparent where it makes it a lot harder for the average person who doesn't understand how to invest their money to really build wealth because they get stuck in emotion and then they end up losing and just forfeiting their money to Wall Street. Booms and busts are part of the economic system. It's a part of every asset class. This has happened for centuries and it will continue to happen in the future. That's nothing new. The issue now is the amount of volatility that we're seeing because of the amount of new people that we have in the market, the amount of leverage that we have in the market, and the amount of manipulation that we're seeing in the market that we never saw happen before. First, just on the technology front, we have the growth of things like high-frequency trading, which allow big organizations to trade hundreds of thousands of shares of stocks in a millisecond. Not a second, but a millisecond, which can really manipulate a market. Now, if you're a long-term investor, this type of high-frequency trading doesn't really matter too much because you're investing for the long term. But let's look at really more of how we're driving more dollars into the market. Because the reality is the way the stock market works is when you have more buyers than sellers, when you have more money coming in than out, the value of stocks go up. But when you have more sellers than buyers, when you have more money going out than in, the value of stocks go down. And so you have everybody on Wall Street who wants more money coming into the market than out, And this is what Wall Street and every organization is working on to figure out how can we get more money into the market. Back in the day, the stock market was really just reserved for the people that were connected or who had access to a lot of wealth, because it wasn't so accessible or easy for you to invest your money into the market. Then came the growth of individualized brokerages, which allowed regular people to invest their money in the market, but that still wasn't very easy because you had to work with a broker, and then you had to buy a stock and sell a stock, and it just took a lot of time. Then came the invention of things like the 401k and the IRA, which now incentivize people to invest their money where? Into the stock market. Because now when you throw your money into your 401k, your money gets locked up, because now you can't touch your 401k money without being penalized until you're a whole lot older. So now you're putting your money into your 401k, this money gets tied up with a money manager on Wall Street, and this money goes into the stock market. So the 401k created a flood of money coming into the stock market, and so now Wall Street was happy, because now we have money tied up for 40 years, because when you put your money in your 401k, it's tied up, and this money goes right onto Wall Street. Then came your digital brokerages, companies like Charles Schwab and TD Ameritrade and E-Trade. These companies started popping up, and they allowed you to now buy and sell stocks from your computer for just a small commission. Now all of a sudden, if you have a few extra $1,000s, you could put this money into the market and just pay a little bit of commission, and now you can manage your money yourself. After that came the growth of new technology, companies like Robinhood, which allow you to now invest your money into the market with as little as $100, and you don't have to pay any commissions. Now you have a whole bunch of young people now starting to put their money into the market, because now you can invest your money without paying any commissions, and you don't need a whole lot of money to start. And then came the growth of fractional share investing, where now even if you don't have $100, or even if you don't have $10, you can invest as little as $1. You can buy a piece of a company, which keeps pouring more and more money into Wall Street. All these things are good at giving people accessibility into the market, getting people accessible to investing, and allowing people to now finally put their money to work. But now the issue is, what happens when things go down? Because a lot of people who are investing their money, especially if they're new investors, don't know how to manage their money during a crash. They don't know how to manage their money in a downturn. And so when you see a crash happen, it can be a whole lot more painful, because when money goes down, now not only do people see the 401ks get cut in half, institutions start to hurt, but then you have a whole wave of retail investors that get kind of emotional and panic, and they would want to sell, and this could push the stock market even lower. That's why after the 2020 crash, we saw a historic bailout by the Federal Reserve Bank for the stock market, because the Federal Reserve Bank essentially said that they will print an unlimited amount of money to keep pouring this money into the market to keep the market inflated. If you're sitting there and you're having money in the market, this is all great news for you, because you're the one benefiting from the system. You have everybody behind you trying to make sure that your investment goes up. But if you don't have money in the market and you're not the one benefiting from the system, then you're the one paying the price, because you're seeing more inflation happen, you're seeing asset prices go up, which is good for people who own assets, but it's not good for people who don't own assets. Again, this is why financial education is so important. It doesn't mean that the market will always go up. I mean, yeah, there's a lot of risk out there, and you have a lot of cheap money out there which can prop up markets, and you're gonna see more volatility. You're gonna see another stock market crash. When is it gonna happen? I don't know, but this is reality. It's a fact. We're gonna see another stock market crash, but if you're financially educated and you understand how the stock market works and you understand how investing works, that's a great opportunity for you to come in and buy even more. Again, if you do want to learn more about the stock market, we have a free guide that I just talked about, and we also have the Stock Market Insiders program, where you can work with some of our stock market coaches every single week, which will help guide you through the stock market. If you want to learn more about that, I'll also put a link to Stock Market Insiders and how you can get a free trial to that in the description below. And number 5 has to do with affordability, because once upon a time, life was affordable without the need for debt. This kind of ties everything that I've been talking about all together, but back in the day, life was affordable. And back in the day, life was affordable with a one-income household, because back in the day, you usually just had the man going to work and the woman staying at home. Now, I'm not saying this is what's right, this is just how it was. And so when you had one person going to work, you had a family that was being supported off of one income. Well, over time, people have become more open to the world, finally, and now you have 2-income households. But the reality is, now that we have 2-income households, you would imagine that people will be a whole lot wealthier, because all of a sudden you just double the amount of money that you're making in your household. But that's not the case. People are actually broker now than they were before, even though we have 2-income households, because the cost of living has gone up so much. Just think about this. A few decades ago, a 1-income household was able to go out and buy a home, go on vacation, afford life, buy your groceries without that much financial stress. I mean, you've always had financial stress across generations. It's always been there. but one-income households were able to support an entire household very normally. But now across the board, you have two-income households that are drowning in debt. You're drowning in student loan debt. You're drowning in credit card debt. We're seeing a record high amount of credit card debt again. You have a record high amount of auto loan debt. And so you have two-income households that are now relying on debt, whether it's credit cards or home equity line of credit or whatever it is, they're relying on debt to be able to afford their lifestyles. Now, there's two reasons why you're seeing this happen. The first reason is obviously because of everything that we just talked about. You have higher cost of living, you have higher student loans, you have this cheapening of the dollar through all this money printing and the debasing of our currency. You're seeing the system destroy the value of our dollar, which is hurting our economy, which is making it harder for people to be able to afford their life. That's a fact. And at the same time, you also have a higher standard of living. Nowadays, everybody wants to have the newest iPhone. People want to have the newest Lululemon leggings. People want to have the newest MacBook. People want to have this new technology because we are living in this technology age, and we're also seeing the growth of people being able to buy things now and pay for things later. Not only do you have the growth of credit cards, and credit cards are becoming way more popular, which is good if you know how to manage your money, but not good if you don't know how to spend your money. And you're also seeing the growth of things like buy now, pay later. This is becoming so popular across the internet because now you can shop and buy whatever you want, and you don't even got to worry about paying the price today. You can buy your new furniture, buy your new clothing, buy whatever you want today and worry about the cost tomorrow. Yeah, you know what? Why don't we just add some extra guac to my order? I can just pay it off in 3 easy installments. It wasn't always like that. On one end, debt wasn't so easily accessible. It was harder for people to borrow money, which meant that you had a lot more people forced to live within their means. And at the same time, you didn't have such a growing standard of living so fast where everybody wants to own all this new stuff because you didn't have all these fancy technology things that people needed to own. And so now you're faced with a higher cost of living, a higher standard of living. So now you have multiple incomes working together, not only to just pay your bills and build wealth, but for a lot of people, it's just to be able to get by. All these 5 things that I just talked about are adding up each and every day. And it's going to eventually get to the point where we're going to hit this tipping point or breaking point where people are now milked out of every penny that they have, and it's going to be harder and harder for people to go out and spend more money, which will make it harder for the economy to grow, which is why, again, it is so important for you to be financially educated. That way you can be a financial winner in any circumstance, because you have to be the person to take care of yourself. You cannot rely on your government. You cannot just rely on your corporation. You can't just rely on somebody else to take care of you. You need to be the one that's taking care of you. And if you enjoyed what you saw so far, then you're gonna love this. If you're between the ages of the early 20s and the early 40s, then chances are you've had to go through a lot of things financially that older people didn't have to deal with. For one, previous generations didn't have to drown in debt just to get a college degree, and then when you got a job, previous generations had something called job security because people would just work at the same job for 40 or 45 years, and then previous generations never had to really worry about retirement because retirement was essentially spoon-fed to you with the help of pensions and Social Security. Now, pensions have become a thing in the past, and Social Security, woo, Social Security is drying up. Now, my goal is for you to make smart financial decisions today. That way you can live your life the way you want tomorrow without relying on other people or the government to take care of you. And the kind of crazy thing and sad thing, and the thing that really just kills me to see, is that although a lot of millennials and Generation Zers, because it's even worse for Generation Zers, although a lot of young people have started to understand that Social Security might not take care of them the way that they might expect, you still have 3 out of 4 millennials that are expecting and hoping Social Security to take care of them when it comes time to retire. Newsflash, you do not want to rely on the government to take care of you. But Jaspreet, I've been paying Social Security taxes every time I get paid. I should get paid back. You're right. You are investing your money into Social Security. That way when it comes time for you to retire, you can use this money and some, because hopefully the government will invest this money the right way and give you more money when it comes time for you to retire, so you have an income when you retire. But the only issue with that is Social Security is drying up. So your Social Security money that you're paying right now is paying for older people to retire today. It's not going to be going to fund your retirement. Now, this is not supposed to be a video about Social Security. Sorry about the rant. What I want you to understand is that there are certain factors out there that are screwing millennials financially. So you want to understand what the system is doing. That way you can be smart with your money and build your wealth, even though the majority of people keep getting screwed by the system. There are 4 main ways that young people are getting screwed by the system, through the education system, through the cost of living, through what's happening with savings accounts, and what's going on with your investments. I'm going to first be talking about these 4 things. Once I finish up with that, then I'm going to be talking about what you need to do. So let's start with number 1, education. The system that pretty much all of us, including me, are taught is that you need to go to school. Then after you finish 12th grade, it's time for you to go to college. And then if you don't have the money to go to college, if you don't have rich parents, you got to take on some student debt to go to college. And then after college, if you really want to get an advanced degree, you got to go and become a doctor, a lawyer, an engineer, an accountant, something like that. You got to go and get a specialized degree, and then you got to take out some more student loans to do that. And once you got this specialized degree, now you can enter the workforce with a mountain of student loans, but now at least you can make a decent living. I have some very strong opinions on this, so hear me out. My parents are traditional Indian immigrants from a state in India called Punjab. And when they came here, they wanted a better life for me and my brother. My parents came to this country with next to nothing, and they busted their butt that way me and my brother could have a better life. Now, the way that most immigrants, especially immigrants from India, feel that you can have a better life is through education. Because if you can get educated, if you can get a good degree, if you can become a doctor, now you can earn a good salary, you'll be able to have bigger savings, and you will be able to live a good life financially. Now, the issue that I have with education is that I went through a lot of schooling. I finished up my 12 years of high school. Then I went to college. After college, I went to law school because I told my parents I didn't want to be a doctor, and they were like, no way, we can't have that. You got to at least become an attorney. So I went to law school, got my law degree, and well, I don't really use my degrees the way most people would expect. I have the same conversation with my uncles and aunts all the time. I start off by talking about how school is dumb. And then everybody says, oh no, school is not dumb. You have to go to school to get your degree to become successful in life. But the thing that I need you to understand here is that education is the backbone to success. School is not the only place you can get education, and the issue with school isn't just school. Let me talk about this a little bit deeper. I can pretty much guarantee that I would not be where I am today if it wasn't for the schooling that I went through. Now, you might hear that and say, wait, how can you say that, but then at the same time say these bad things about school? Well, the value that I got from school wasn't in the classroom. When I was in college, I majored in a subset of psychology, and I took a bunch of biology classes. I took a bunch of psychology classes. I took a bunch of physics classes, I took a bunch of math classes, and I honestly don't remember anything that I took. For the last 2 years of my college degree, when I was trying to find psychology classes to take, the thing that I paid attention to was what room my class would be in, because we had this one big lecture hall which had these really soft cushiony seats that kind of reclined, and I knew that if I took a class there, I could fall asleep in class. Most of my college classes were completely worthless. Now, this is not to say that these classes were bad classes. They just weren't for me. I wasn't interested in them. So I would just go there and take a nap. It was a waste of money for me. But there were some classes that I really loved. I took a class on real estate investing. I took a class on marketing. I loved those classes, and they really got me thinking. Those were the classes that I paid attention in, and I did really good in those classes. I did pretty decent on my psychology classes that I slept through because I just learned how to study, and I would cram all this information for the exam, and then right after the exam, all this information would just leave my mind. So I don't remember anything that I learned in the vast majority of my classes, but there's a few classes that I absolutely loved, and I got a lot of value from those classes. Couple that with the education that I got outside of the classroom, because when I was in college, that's when I got into entrepreneurship, and I started a few businesses of my own. And so I got to network with other entrepreneurs, I got to start my businesses, and I had this kind of cushion when I was starting my businesses because I was still in school, so I didn't have that real pressure of making money tomorrow because I wasn't in the real world yet. I was still in school. So school had value for me, but not in the traditional way. The issue that I have with their education system is that our education system has not changed since the Industrial Revolution. We still churn out educated students like we do factories. You come in, you sit in a classroom from 9 to 5, and you read books, you just kind of listen to whatever the teacher says, and then you leave. Now, obviously that's changing because of the pandemic with the work from home type of stuff, but at the same time, we haven't really changed the way that education works. We need to, if we want to be competitive in the world, we need to promote innovation. We need to promote creativity. We need to promote sciences and maths, the things that are actually going to keep us competitive as a country and as people, instead of just farming out students, just passing out these degrees. Our society has kind of built a stigma that this is the way that you need to become successful. You need to go to school, then you got to go to college, then you get a higher level degree, and then you can go out and enter the workforce. And if you don't do that, if If you do something different, then you're looked at as weird, you're looked at as dumb, you're looked at as broke. But the reality is that there are so many other opportunities out there, and we need more people to look at these opportunities. So we as a society need to really start pushing and educating people about the different opportunities out there, like trade schools and creative fields. That way people have different opportunities, because some people should not be going to school the way that they are. They're just racking up a whole bunch of debt, they're graduating school, and then they're wondering, what do I do now? The average person in America graduates college with something like $40,000 of student loans. You're 18 years old, all of your friends are going to college, all of your teachers keep telling you to go to college, all of your friends keep telling you to go to college, every aunts and uncles tell you to go to college, and you have no idea what you want to do, and so you just sign the paperwork for these student loans because you have no idea what $40,000 is actually going to cost you. And so you just go to college, you start taking a bunch of classes, you have a lot of fun, because college is a lot of fun. There's a lot of fun in college. I had a great time in college. But then you graduate college, $40,000 in debt later, and now you're trying to figure out, okay, what am I good at? What are my skill sets? What kind of job can I get? What kind of job should I get? And now you enter the workforce, you're making $30,000 a year, you have $40,000 worth of student loans, now you want to go out and buy a car, you want to buy a home, and you're trying to figure out how do you make ends meet. This doesn't mean that traditional schooling is useless. If you want to become a doctor, an attorney, an accountant, an engineer, you have to go through schooling. You have to get these degrees, you have to get that education, and we need these fields. These are important for our society to function, but we want to have the best people doing this. We don't want people doing this who just want a big paycheck. We want the people doing this who actually love what they do. And I was going down the medical route for all the wrong reasons. I was going down the medical route not because I loved medicine. I mean, I thought I loved medicine, but the real thing that I loved the idea of was just being financially secure so I could take care of myself and so I could take care of my family. But if you want to become a doctor, an attorney, an engineer, an accountant, whatever it is, you should be doing this because you love what you do, not just because you love the idea of the paycheck that you could get, because we need people who are actually good at what they do and who love what they do, not just crappy people in these positions who are trying to make a lot of money. The reason why I keep hammering this point is because there are so many ways for you to become financially successful without having one of these degrees. If you can have one of these degrees and you love what you do, yes, you can become very financially successful, but that's not the only way to become financially successful. You can do something else, find something that you love, and become very financially successful and be more fulfilled and do a better job at what you do if you just care about what you do. And if you don't care about what you do and you're just doing it for a paycheck, then you're doing it for all the wrong reasons. You're hurting yourself and you're hurting your patients or your clients. So when it comes to education, the issue that young people have is right now, everybody thinks that they need to go to college, or everybody thinks that they need to get a higher degree. That way they can be competitive in the workforce because everybody has a degree. Now you can compare that to the previous generations where very few people had a college degree. And so one, college didn't cost as much. And second, if you had a high school degree, you were competitive. If you had a college degree, you were very competitive. Nowadays, if you have a high school degree, it doesn't really matter. No one cares. Everybody has a high school degree. If you have a college degree, same thing. Everybody has a college degree. Now you need to have an extra layer of degrees or certificates to be competitive, which is one of the reasons why it's costing more money in order for people to actually survive. But now on top of that, the price of education has skyrocketed, partially due to the fact that the United States government will federally guarantee student loans. So colleges heard that and they said, oh, so we can charge whatever we want, and you, the government, will make sure that you loan students whatever money they need? Okay, so then colleges started hiking up their tuition rates, and now it is extremely expensive for someone to go to a four-year university, and everybody feels that that is the only way that you can become financially successful. So everybody's going to college, just trying to figure out how they can get a degree and become successful. You graduate school with tens of thousands of dollars with the student loans, and then you enter the workforce with no idea of what you want to do or how you're going to make money. We have to improve our education system if we want to continue to be competitive as a country, because so many countries around the world are working on ways to innovate their education system and make the education system more accessible for people and to make their education more beneficial for their students. And so us as a society, we need to see reform and we need to see an improvement in the way that we educate our students, because education is the backbone for success. And we need to improve the type of education that we're giving our students so people can continue to stay competitive in the future. The second way that young people keep getting screwed over by the system is because what we've seen happen decade over decade over decade is that our paychecks get bigger bigger, which is good. But the amount of buying power that our paychecks have keep getting smaller. And so while it looks like you're making more money because the size of your paycheck is bigger, you're actually broker than previous generations were before, because the cost of living, the price of everything, keeps going up faster than your paycheck. Let's take a look at the numbers. Between 1970 and 2021, wages have gone up by around 800%. Now that looks good when you look at it by itself, because it tells you that people are making more money now than they did about 50 years ago, which is good. But that's just looking at one side of the coin. Yeah, you made more money, but you also gotta look at the expenses. At the same time, housing has gone up between 1970 and 2021 by 1,500%. Your wages are not keeping up with the growth of housing costs. The cost for you to go out and buy a car has gone up by around 1,100%. And that's not all. What about healthcare? Healthcare costs have skyrocketed. Healthcare costs have gone up by just over 1,500% between 1970 and 2021. Now, that 800% wage growth doesn't look as attractive when compared to all of your expenses. But it's not just a higher cost of living, it's also a higher standard of living. Because back in 1970, no one was buying an iPhone, no one bought a cell phone, nobody bought Lululemon leggings, people weren't buying extra guac. And so our standard of living has gone up as well. And so not only do we have a higher cost of living, but now you gotta add in new costs, because people gotta have all their electronics, all their accessories, their smartwatches, their smart TVs, on all the other fancy technology that we have now, in addition to the higher cost of living. So how do you make up for this? Well, one of the things that people are doing now to make up for this is 2 people are working in a household today, unlike in the 1970s and before, when you typically had a household with only 1 person living. So you have 2 incomes now versus 1 income. On top of that, more and more people are turning to debt, because if you want to keep affording life and you want to keep your standard of living by having all of your nice things, and your 2 household income cannot afford it anymore, well, now what do? You go to the bank, you get a credit card, you open up a line of credit, and now you got some extra cash to go out and live your lifestyle. And now you're playing the payments game, where anytime you get paid, you're using your money not to build your own wealth, but to pay off all the things that you bought that you couldn't afford in the first place. By the way, if you're a money nerd and you're trying to figure out why the cost of living has skyrocketed so much, well, this has to do with the fact that around the 1970s, that's when the United States dollar was taken off of the gold standard, and that's when we started printing more money, which caused more inflation, which caused the value of our dollars to be diluted, which made the price of everything else go up. If you want to learn more about that and what has caused all this inflation over the last number of decades, I already made a video where I talked about this, and I will link that video for you in the description below. The third reason why young people keep getting screwed over by the system is because of what's going on with our savings. If you could believe this, there were previous generations that became wealthy just by saving their money, because savings accounts paid you a good enough interest rate where you didn't have to rely on your investments. If you just saved a little bit of money, you were going to be able to retire, because now you had your savings, and then you had pension, and then you had Social Security. Nowadays, we live in a society where if you can get a half of 1% interest a year on your savings account, you are in the cream of the crop of savings accounts, and you are getting some of the best interest rates out there. Most savings accounts right now are paying something closer to 0.1%, if not 0.01% interest on their savings accounts, which means if you are able to save up $1 million and you save all $1 million in your savings account, your bank is going to pay you a whole less than $10 a month in interest on your savings on $1 million. Again, just look at the numbers. In the mid-1980s, if you went to the bank and you put your money into a CD, a certificate deposit, whether it was a 6-month CD or a 1-year CD or a 5-year CD, you could get more than a 10% annual interest rate on your money from your CD. This is just by saving your money in the bank. You could get a 10 or 11, almost 12% interest rate a year on your CDs. Now, people can't even get that on their investments, but before, people could get that in the bank. This is one of the most obvious places where people who are financially educated are being rewarded, and the people who are not are being screwed. Again, let's just look at the numbers. If you go and you save all of your money at Bank of America, not only are they going to charge you maintenance fees, but they're going to pay you 0.01% a year in interest on your savings. But now, if you took your money and you invested it into the Bank of America stock, they're going to pay you a 1.7% annual dividend because you invested in the Bank of America company instead of keeping your money at the bank. It's not just the Bank of America. Let's take a JP Morgan Chase Bank. If you go and you save your money at Chase Bank, they're going to pay you, again, 0.01% a year on your savings. But if you invested your money into the JP Morgan Chase Bank stock, now you own a piece of the bank and they're going to pay you a 2.2% annual dividend on your investment. A dividend is a cash payment that a company will pay you just for investing in that company. What this tells me is that these banks are making huge profits. And if you're financially educated, and if you invest your money into the banks as an owner of the company, well, now they're going to reward you for that. But if you just save your money at the bank like the majority of people do, they're not going to reward you for that. Now, of course, when you invest your money into a stock, that comes with more risk, because when you invest into a stock, the stock market could go down, something could happen with that company, and you could lose the value of your investment, versus when you just save your money, you don't have that same risk. But you kind of got to understand what's going on here. Banks are able to afford these huge dividend payments, but they're not going to pay you that interest on your savings. This is why, again, it pays to be financially educated, and the people that are not financially educated keep getting screwed over by the system. Now, by the way, if you are interested in learning more about how you can actually build your financial education and learn how to manage your money the right way, I'm not going to go over all of that in this video, but we do have a free PDF on money management and investing that will walk you through the financial education that you need, that we all should have learned when we were in school. If you want to download this PDF, it's completely free when you sign up for a daily newsletter, and I got the link to how you can download this PDF in the description below. And the fourth way that young people have been screwed over by the system is through their investments. So young people are fortunate or unfortunate because we have gone through two once-in-a-lifetime crashes in just over 1 decade. First, we went through the 2008 real estate collapse. This was a once-in-a-lifetime crash where we almost saw the entire financial system come crumbling down. And then things started to recover, and then came the 2020 pandemic and recession, which was again a once-in-a-lifetime type of crash and recession. And so young people saw their life investments, they saw their investments, they saw their savings go at risk, and they saw their investments get slashed in half almost overnight. And what happens during these crashes is many people sell out of panic, out of fear, because many people are not financially educated, and so many people lose a huge chunk of their life savings when these crashes happen, and chances are we're not out of the water yet. Now, one of the reasons why I said that young people are fortunate for these crashes is because the people that are financially educated kind of benefit when these type of crashes happen, because market crashes and recessions are where more millionaires are born than any other time, because that's when investments go on sale. And so you can go out and you can buy investments and assets at a discounted price, and now you can own way more investments and you didn't have to put in all the money because everything is on sale. The issue with that is that most people don't learn that until it's too late. They see their investments go up and they feel great, and then things come crashing down, and then they panic and then they sell, and then you see a huge chunk of the country lose their life savings, they lose their investments because they didn't know how to manage their money the right way. And so when we talk about investments, everybody's told, hey, just invest your money to the 401k, just invest your money in the market, but they're never told how to manage their emotions. They're never told the risk management system. They're never told the psychology part of the investments. And so you invest your money thinking that your investments are only going to go up because that's what everybody says. Everybody says that the stock market is going to grow by 8 to 10% a year. And you think, okay, fine, I'm going to put my money in the market. And then as soon as you start investing, you might see some growth, which makes you happy. And then when things start coming down, you don't know what to do. And so when you see your portfolio in the red, what do? Well, you sell to cut your losses. But now, even if we take a step back and we look at our asset classes from a broader kind of high level standpoint, we are kind of on choppy waters as a country because we've been printing so much money. Our economy isn't as stable as it used to be. And so we kind of see these huge wild swings in the market where back in the day, you didn't see the same level of volatility that you see now. I mean, yeah, you still had volatility back in the day. Everybody has seen volatility. Everybody has seen emotion in the markets. Everybody has seen market crashes. These things have always been there and they will always be there. But the level of volatility that we have now is much more than we have ever seen in the past. And so if you don't have the financial education or the risk management or the psychology now as an investor, you can really be the one paying the price because it can be very painful to see your portfolio in the red. So now the question is, at this point, what do you do? You're a young person that's working hard, you're trying to save some money, try to invest some of your money. What do you do to build your wealth? Well, the first thing you got to do is you got to get financially educated. You got to learn about money. You got to learn how to save your money the right way. You got to learn how to live below your means. Then you got to understand how to invest your money. What are stocks? How does stock market investing actually work? How do you analyze a company? You got to learn about real estate investing. What is real estate investing? How can you build cash flow through your real estate investments? And cryptocurrency, because this is such a hot asset class right now, you want to understand what you're investing in, and you got to understand basic investing principles. What is debt? What is the cost of margin? And if things go down, what is going to happen? Because we have a lot of young people trading money, investing money on margin who don't really understand the cost of this debt, because if things slow down or if we see things come down, then that can become very expensive. The very first thing that you got to understand is that you need to have savings. Everybody needs to have money in the bank account to protect you from an emergency. Now, I know I talked about the issues with savings earlier because savings accounts are paying you nothing. But what you have to understand about your savings, especially now, is that your savings are not there to make you wealthy. Your savings are just there as a shield to protect you in case of an emergency. So you got to have some savings. And the only reason why you should be saving besides for an emergency is to make a big purchase like a house or a car, or to save money to make an investment. If you already have a year's worth of expenses saved in a savings account and this money is there for your emergencies, and you don't have any big purchases coming up, and you just keep saving your money, not for an investment, but just saving it because you think that's the best purpose for your money, well, now you're getting screwed over by the system because inflation is eating away at the value of your savings. If you want to save money for an investment, maybe you're worried about the price of assets, maybe you can't find a good value asset, maybe you don't know where to invest your money, that's okay. You can save this money until you're ready to invest, but you got to at least have that intention to invest this money. Next, when it comes to your investments, the next issue that a lot of people are making is they're investing their money based off of emotion, based off of hype, based off of what everybody else is doing, instead of actually doing the analysis themselves, right? A lot of people have this feeling of, how can I get rich quick with my investments? What can I do with my money to double my money? How can I get 100% returns on my money? And these are the type of returns that are not sustainable. So you got to be smart as an investor. You got to know what your goals are, and you do not want to be one of the people that is trading or investing on emotion, because the people that make the most money over the long term are the people that invest on financials, not emotions. Emotions can make you a lot of money very quickly, but you can also lose that money just as fast. This is where, again, it pays to be financially educated. This might not be the most attractive thing for you to do, but this financial education is what will build you wealth over the long term, not just the short term. Again, if you want to learn more, we have a free PDF that you can download in the description below. We have tons of videos on our YouTube channel, and you can check out our website, theminority-mindset.com, because we're posting new articles every single day that will help you be better with your money. Thank you for watching. If you enjoyed this video, here's a video on how the system is keeping so many people poor that I think you'll love. And while you're at it, download our free guide on how to invest your money in the stock market. And as always, keep hustling. And so you got to understand, if wages go down, the real money in the system goes down, but interest rates go down, now debt or credit in the system will go up, which kind of helps balance out this kind of lack of money in the economy,